A list of things that I've put on the board here just to show you some of the most common things: earnings reports, news, income statements, balance sheets for companies, Fed announcements, which we've got tomorrow, economic reports, God forbid, terrorist attacks and so on. All of these things, technical indicators, all of these, if you like, influencers will make people buy and sell, correct? They're going to be reasons why people buy and sell. I like to bring it back down to understand, once people know why they're going to do their take action in the market, they're going to have these thoughts and perceptions, which is going to lead them to then take the action to buy or sell. And what this is going to do, this is going to create, obviously, the chart itself. Well, all a chart is showing us, unfortunately, is unfilled orders. Some of you guys may have been familiar with a gentleman who's won Best Educator of the Year several times here, Sam Seiden. He's the guy I trained under about 5-6 years ago now, a very good friend of mine. I share in his methodology of the market because he had the opportunity to work directly on the floor of the Chicago Mercantile Exchange. And I myself have worked in funds and proprietary floors. And I know that whatever we think about the market, guys, any thoughts, perceptions that we have, we're led to take actions to buy or sell. And that creates the chart. And the chart shows us what's happened. But they're all filled orders, all filled orders. And what it's very challenging for us as fundamental analysts to do is we're always getting the news late to the game. I've found that in my own trading, we've got to be one step ahead. And one of the things I like to kind of realize, and always, whether or not it's a tough truth for some people to hear or not, is if we could truly understand what direction the price was going to go on any currency pair, any stock, any futures contract out there, just by reading fundamental information about it, everybody would get really good at reading fundamental information, and we wouldn't really have any need for charts that often, right? It would be as simple as just read the fundamentals, stick to your game plan. And even if you're really, really good at fundamentals, you're never going to get an entry point without looking at a chart. Would you agree with me on that one? So let's assume we're really good at those fundamentals. We're never going to truly be able to hone in a nice entry point without a chart anyway. So I always say to people, if you do understand the fundamentals a bit better than I do, then great, but you've still got to get time the market. And one of the things that I specialize with my students is about timing the market. Because, guys, what we need to understand, it's not the filled orders that create the big moves in price. It's the unfilled orders, and it's the concept of truly understanding what supply and demand is. Because here's something I want you to all write down right now. Can you write this down for me? Okay, before we go on to this understanding, because every candle is created because of a demand and supply relationship, okay? And the order flow that's driven by demand and supply is based on people's perceived value, fear, and greed. Now, you see this highlighted in yellow, perceived value, fear, and greed. People have those values. They have greed, fear, worry, angst, excitement because of the information that they necessarily read. And it creates and makes them do things, right? Well, whatever reason somebody wants to buy or sell, I'm never really going to know collectively why people are buying and selling. I don't have a way to mystically tap in with my telepathic powers and know everybody in the world exactly why they're buying and exactly why they're selling right now. I'm never going to know that. But what I am going to know is where the big money's buying and selling. Let me explain this to you, because let's start by understanding why a candlestick is formed. Take this over here for a second, okay? Remember something. Every buyer needs a what, guys? Anyone out there who wants to buy, what do they need above all else? To be a buyer, what do you need? You need a seller. Great. Yeah, hey, Joe. And every seller needs a buyer. If you've got a ton of people willing to buy at a certain price, but no one's willing to sell to them, the price isn't going to move, is it? So I don't know the reasons why. It's like you could be selling a bit of real estate. You could be selling a house. You don't need to really know the reasons why. All you need to know is the price and that somebody's willing. You've got to be willing and you've got to be able. So let's assume that we've got 400 people all willing to buy at a price of $41.30 right now on this example here, okay? 400 people willing to buy at this particular price. For those people to be able to buy, what do they need, guys? They need, for 400 people to be willing to get their orders filled, they need 400 sellers at the same price. Exactly. Well, can we assume there's going to be sellers at this particular price? No. Let's say, for example, we had X-ray vision that allowed us to zoom into the chart and see exactly the amount of buyers and sellers there. Well, that would be the key to the kingdom, wouldn't it? If we could look at a price chart and know specifically exactly how many buyers and sellers there were at that time, I mean, that would be the gold dust, wouldn't it? But we don't have that. But what we do have is we know the dynamic of what has to happen here. Because if at this price you've only got 100 people willing to sell, what's going to happen is, it's just basic math here, is those 100 sellers are going to cancel out 100 buyers, but you're going to be left with 300 people willing to buy and no one willing to sell. You have a picture where demand on the buy side is greater than supply on the sell side. What happens when demand is greater than supply, my friends? There's only one thing that can happen. Prices are going to rise. Prices will rise. That's all that's giving you a green candle, you see. What we would get if there had been 100 sellers at this price and 100 buyers, we just got a doji. We'd have got no movement. So when I see a candle, again, I know that there was an imbalance between buyers and sellers at this particular price. Note this down at the end of the day. Any movement in price is always going to be about an equation where one of two competing forces, buyers and sellers, become zero at a specific price. So when one side gives way, the price is going to go up. Now, answer me this. Am I ever going to know why those people are buying and why those people are selling? Am I ever really going to know? Am I ever going to be able to ask those institutions? No, I'm not. It's something that we need to accept. It's something that I need to accept. But what we do know, if we know how to look at the chart in the right way, is where the biggest imbalances are between the buyers and sellers. Because what I want to find, all I need to know is where the biggest buyers and sellers are, where the biggest imbalances were. Take a look at this picture here, for example, for a second. All you have on here in front of you right now are stacks of orders. Take this chart that we've got here right now, okay? Now, if we just take a look at this chart for just a second on here, this is pure supply and demand. Imagine you were a market maker, imagine you were a huge order taker, you were working basically seeing every single order come through. What you're going to have at different price levels are stacks of buyers and sellers. Now, think about this for a second, guys. Why was the high recently 139.91 on the Euro USD? Why? Because there was a stack of orders this big, of big money and people trying to sell. And there was a very small stack of people trying to buy. Does that make sense? There was a huge stack of people willing to sell, because if there had been enough people to buy from those people who were willing to sell at 139.91, what would have happened to the price? The price would have just drifted along. It wouldn't have moved. It couldn't have moved because there would have been equilibrium.